Good morning, this is Wayne Bilal with another smart profit maximizing system. Smart profit maximizing moment. Behave. And this is Tessie, who's really kind of being a puppy today. She's really misbehaving, yes. Yeah, so we're going to put you down. Anyways, my name is Wayne Bilal. I'm the founder of a local CPA firm since 1991. Been doing this a long time. Actually passed this CPA exam back in the late 70s, so I've been helping small business owners for a long, long time. Yeah, you misbehave here. Rewarded for misbehaving. I'm doing well. Also, the creator of the Smart Profit Maximizing System and author of the, soon-to-be author, we're almost there, of Hidden Profits, 21 Steps to Finding the Gold Hiding in Your Business Right Now. And, of course, we do tax planning, which is what we're going to be doing pretty much November, December, until the end of the year. And you should be too, because in the last 3 years, we've helped our clients save over $4.3 million that they got to keep and didn't send to the IRS. And finally, tax return time. Tuesday, that's it, 28. Sorry about that. I forgot to shut my phone down so it wouldn't do that. That's wonderful, having a bad start here. Anyway, so we're going to talk about why your tax preparer is always asking you to keep a mileage log. Well, it's really pretty simple. Let's read one tax court opinion. I know that's boring. More tax court summary back in 2012. A couple who used their vehicles in their sole proprietorship found out the hard way that they needed to keep logbooks. Their logbooks were riddled with mistakes, questionable entries, and other irregularities, so much so that the tax court was unable to rely on them. As a result, the court upheld the IRS disallowance of all mileage expenses for the vehicles. Look, if you run a business, you must be prepared to substantiate auto deductions as adequate records. Failure to do so will cost you thousands of dollars in increased taxes and or fees for accountants or tax lawyers if you're audited. All right, it's really very simple. IRS locally is following the regulations, which say you must, and the law, which says you must keep a log at the time that you do the mileage. Now, in honesty, there's an easy way to do this. There's a lot of apps. One of my favorites is called MileIQ. No, I don't get a kickback from it, but it's got a couple things I like. One, it's got Drive Detect, which means even if I forget to turn on the app, it remembers and it keeps track until the next time I turn on the app, and I can put them to business, personal, put notes on what they're for. And second biggest reason is it backs it up online, so I can send a copy to my CPA or my tax attorney or to me if I'm doing your tax return at the end of the year. And if I lose my phone, it's still there. All right. You need to be able to substantiate the amount of each expenditure for the vehicle, including the purchase price, the vehicle improvements, lease payments, repair and maintenance, gas, and other expenses. You got to have backup. The total mileage on each business vehicle and a breakdown between business, personal, and commuting miles, and that's what that app will do for you. The date of the business use and a brief description of the business purpose for each use. That's why I use the app, because trust me, before we had the ability of everybody carrying a smartphone and the apps that are on there now, I probably had 5 out of 200 that actually kept the log the way they're supposed to. And we got lucky because they weren't auditing a lot, but they're back, they're auditing. Records need to be maintained in an account book, diary, log, trip sheet, or similar record near the time of usage. Without a written record or business or investment mileage, the local tax auditor will not allow the deduction. All right. You can go to the appeals court or tax court. It's going to cost you a ton of money, and we have won some. All right, by basically getting oral testimony, a copy of a calendar. I mean, literally have to have somebody sit down with their calendar and do Google Maps on a spreadsheet. When here, did that, do that. It takes a lot of time. It took a lot of time on their hand, and then you had to hire us and a tax attorney to fight it in an appeals court to win. All right. There's other ways you can do it if you want. There's a digital recorder. You can do that and then hand it to somebody to transcribe it. Seems silly to me. Use MileIQ. Make sure. Now, is it a big deal? Well, maybe in some places it isn't. In Texas and out west where you've got a lot of miles, it's not unusual for a business owner to do 18 to 20,000 miles a year in town, okay? Of which 95% of that can be business. Outside salespeople, construction people. Even as a CPA, I do quite a bit of mileage. And not as much as I used to because of remote access. But at 58 cents a mile, or somewhere, it changes all the time, 55 to 58. I think it's 58 right now. That's something you can look up so I don't memorize that crap. That's a lot. Let's just make it 50 cents a mile to make it easy. All right. If you're doing $12,000, 12,000 miles a year in bit for business, that's a $6,000 deduction, which is worth $1,500 to $2,000 easy per year. So it's worth it for a $5 a month app and to stay out of trouble. The best way to not have a problem with an audit is to plan for it in advance. So hey, until next time, this is Wayne Bilal saying let's make this our most profitable year ever. Thank you very much.